All right, happy Friday, team. Hopefully everything sounds good on your end. Couldn't get to the video yesterday. It was one of those days where we were just working on the same loan all day. We've been working on it all week. Just crazy. Sometimes things are just crazy in the loan business. But I did want to update you on yesterday. So I'm not going to talk about today. Today we're pretty much flat. We've been up a little, down a little on the bond side of things. But I do want to talk about yesterday because it wasn't good. And it appears things will get worse before they get better. According to Jerome Powell, the Fed chair, who spoke yesterday, and sometimes the Fed speaks and it really moves the markets, and sometimes the markets are just ready to move, and they wait for the Fed to speak to move. And I think this is one of those situations where the markets were just waiting for the Fed to speak to move. What he said basically, to sum it up, was, we see inflation coming. It's going to come. When we reopen, you're going to see inflation, but it'll simmer down. So they were saying, we're going to see some inflation here, and then it'll simmer down. We're also not going to raise interest rates or do anything like that until we see sustained inflation, not spiking inflation, but sustained inflation through, the economy getting back up and rolling. I don't know how much more inflation they need to see, but obviously raising rates would be a really, brash move at this point. However, rates are going up. Whether the Fed raises them or not, rates are going up. Remember, the Fed rate does not directly impact mortgage rates. The Fed rate is more for banks. It matters much more to banks. Mortgage rates are based on mortgage bonds, and that's why I show you the mortgage bond chart so you can see what happened. And yesterday, unfortunately, let's just take a look here. You know what? We don't have great news. It's just, goodness gracious. So here's basically what we've surmised. There is a channel that we've been sort of flowing in here. I'm going to give this to you in green. And these little channels, this is inexact drawings and stuff like that, right? But it just kind of shows you, hey, this is where prices were headed. We're trending lower in bonds, which means higher mortgage rates. And it appears now that this channel has now become resistance. And this was yesterday right here. Really bad. Really, really bad. Down 59 basis points yesterday. And broke through a very important support level right here. So it wasn't good. And remember what I said when we saw this come all the way down here and then come all the way back up here, that it would be totally normal and okay if we pulled back to this support level here and then shot back up to my target up here at 102 to 102.5. But since this has happened now, and we are now down here, we've actually touched this level of support today, this really does look more like a continuation of the downtrend, unfortunately. And so, we're not seeing stuff that we like here, folks. Now, yesterday, and I don't have the charts because it's today. We're flat for the most part, except for the NASDAQ just keeps getting thrashed. And what is that a sign of typically? Well, the NASDAQ's been high flying, so it should peel back some. But the reality is here that yesterday, after Fed spoke, stocks went down a lot. Certain stocks are just getting killed. The averages aren't doing too bad. And this is why I was telling you, blue chip stocks, big companies, that's who does well in this environment. That's why I rotated my investments into Exxon, Chevron, IBM, AT&T, Verizon. I despise AT&T as a company, despise. But it's a great investment in a market like this because these big companies will do really well, especially the oil companies. Look at those guys today. Look up those tickers right now. CVX for Chevron, XOM for Exxon. They're all going to do well in this environment because they have big dividends and they have big resources and they have connections, political connections that will work well for them in this environment. So the averages aren't moving a whole lot, but certain speculative type investments are getting absolutely smashed. SPACs, special purpose acquisition companies. I killed it with some SPACs here recently. The two that I still own are getting cremated. So there's a lot of losses taking place in stocks, but not necessarily showing up on the averages. The average is doing pretty well. So the averages were down. Bonds were also down yesterday. What was up? For those of you who've been watching, what was up? We're live. Tell me, what is it? 3-letter word. begins with O, oil. That's right. Oil was up almost 3% yesterday. So we have the Fed telling us inflation is coming based on the reopening. Like, I don't buy that, to be honest. Based on the reopening, we're going to see a little bit of inflation, then it'll tame. But we're not going to raise interest rates. So the Fed basically said we're going to keep interest rates low for the foreseeable future, and the stocks didn't like it. What sense does that make? What is going on here? And bonds, of course, should react negatively to the idea that inflation is around the corner. And it makes sense, why that would happen. But bonds sold off, stocks sold off, and oil went higher. So if do I have my higher? I didn't keep that one. Shoot, I had a really good sound effect for things going higher. But basically, it's the Super Mario effect. I got to find that sound effect. Basically, oil is going higher in this market. And I still believe now, I believe more than ever, that is the thing that's triggering the stuff. It is the dog. It is not the tail. And the expectation for oil prices to go higher, for gas prices to go higher. If you have that old big truck or SUV that you've been hanging on to, and you're like, oh, we should sell that thing. Sell it now. Do that immediately. Those things there's going to be a huge buyer's market for that type of vehicular. Also, we continue to see inventory struggles, and it's nationwide. And I can pull up some stories on this for you, but I'll just speak to it briefly since this is supposed to be a quick update. The inventory struggle is real. And that's why a lot of people believe that the rise in interest rates won't be that big of a deal. I'll give you an example. VA rates have gone from low 2s to high 2s. FHA rates, same. And of course it matters, high balance, conforming balance, but just let's call it 0.5% to a full percent. And the big change that has really impacted a lot of people that I've personally seen is that lower credit score borrowers are really getting thrashed. So for a time there, when rates were really good, rates were sort of good for everyone. I mean, if you were a perfect credit score borrower, for VA, you were getting 2.25. If you were a barely qualified VA buyer, you were getting 2.375. So it was almost the same. It was pretty much it was like an Oprah show. Everyone gets 2.25. Hey. And if you're way down at the bottom, then maybe you'll get a little bit higher. Now, the lower credit score individuals are really paying the price. And that is, the rates for the lower credit scores are really going up. And some banks are starting to move the needle on who will qualify. So, hey, we were doing, 620 FHA. Now we're doing 640. We don't have that going on, but I've seen and heard of that. And you're going to see more of that. You're going to see more of that as the bond market becomes unstable. You're probably going to see some other things change too. Like, hey, we were just ordering appraisals willy-nilly or whatever. We're just be able to lock loans. You maybe see locks get moved down the timeline too, where banks require, hey, we need to have an appraisal in, or we need to have a clear to close, especially some broker banks out there, wholesale channel will probably start doing that. They'll probably start saying we need clear to close, or we need underwriting approval before you can lock. Whereas today, you get a contract in on a purchase and we can lock it. If you, it's just a refinance, we're ordering the appraisal, we order the appraisal, we can lock it today. I think you're going to see that start to get moved down the timeline. So lower credit score borrowers are going to start to suffer on interest rate more than higher credit score borrowers are, although everyone's suffering at this point. You're going to see rate locks probably get moved down the line a little bit as things are going to get worse here for a second. And I don't know how long that is. It could be a week, 2 weeks, 3 weeks. We do believe that they will improve. We do believe that they will get better once we get around a corner here. I don't know what the Fed is doing. I don't know what's up their sleeve. They appear to be thinking that inflation is that they don't need to do anything to combat inflation, which means they're pro-inflation at the moment, which is not good for bonds. They also, it appears that they may be regrouping to some degree. If you go back and listen or read the transcripts of everything that was said by the Fed, it sounds to me, and this is just my opinion, it sounds to me like they have gotten in over their head. Can you imagine that? The Fed in over their head? It seems to me they may have a monster here that they can't really keep control of. Now think about this. They were spending almost $10 billion a day. $10 billion a day. Think about how many starving children you can feed for $10 billion a day. or pick your charitable cause. $10 billion a day is how much they were spending approximately buying mortgage bonds. Now, if that's not enough, do they really have a blank check? I mean, at what point do we go, hey guys, what are you doing? I mean, if they spend $100 billion a day to keep rates at 2.25%, is everyone going to be like, yeah, that's worth it? I think they may have gotten this thing a little bit out of control. It seems to me like they aren't sure if they can deploy the resources that are necessary to square things away the way that they want to without raising red flags or without being under scrutiny. And they may just be waiting for the green light from certain political leaders or whatever to say, hey, we're going to have to do some crazy stuff here. We good? That's what it felt like to me based on what I heard. It sounded to me like they're like, we're not going to do anything else right now, and things might get worse. If we really summarize what was said by the Fed, we're not going to change anything. We're not going to do anything right now. Things might get worse because we're reopening. Because we're reopening, how does that hurt anything? How does reopening hurt anything? Shouldn't. So that didn't make sense to me. So it sounds more to me like the reality is, let's peel back the layer. The layer says, okay, we're not going to change what we're doing. Expect things to get worse in the near term. That sounds more like we have to wait and see how we're going to fix this. We have to come up with a plan to fix this, or we have to get permission to fix this, and then we'll come to your rescue again. Because I promise you, the free market, if the Fed just went away, if they just went to the closet, rates would go way higher. And I mean, I think that's what you're seeing right now. I think the free market is actually overtaking the Fed, and I don't know the impetus behind that. I don't know if it's countries or huge investors or billionaires or fighting the Fed. I don't know. I just know that they aren't winning the battle, and we thought they were invincible. We thought the Fed was invincible because they had the money printer in the garage. And if you can print the money, then you should be able to do whatever. And it doesn't appear that's the case. So did someone take away the keys to the garage? Or is the money printer broken? Or is there something else? I'm not sure. But I think it's very clear that we're going to see higher rates in the short term. And we're hopeful that we will get a bounce back. Today is a day that will again be crucial. Every day will be here at these levels because we have touched a support level here today. We are close to going back to the February 25th lows and bonds. If it gets below that, who knows? But I will tell you when it's time to start buying bonds, because there's going to be a time here where it will make a lot of sense to start buying bonds. I mean, can you imagine if the 10-year gets to 2%? Wouldn't that sound pretty good? If the stock market's shaky, if the Fed doesn't know what they're doing, if oil's going to run away, wouldn't it make sense to buy some bonds? I'll tell you when I pull the trigger. How about that? Okay, so that's it for today. I will try to update again later today if there's any significant advancements to try to keep you posted of what's going on. Obviously, when the Fed speaks, we should listen, but sometimes you have to read between the lines. And so hopefully that's helpful for understanding what is really going on here and what should we be prepared for. Sell your SUVs if you don't need them. Gas is going to at least $5, $6, maybe $7 a gallon here in California. You can count on that. You can take that to the bank. Just look at yesterday when the stock market was killed. Oil went higher, and my oil stocks I've been telling you about went higher. So did AT&T, so did Verizon, so did IBM. But particularly Exxon and Chevron, higher. And today, again, they're running away. So these oil stocks are where money is rotating into, big money. Because remember, those are widely traded stocks. I mean, you're talking about huge volume on these stocks. For them to move, it takes a lot of money coming in. Okay, and they also have great yields, great dividends opportunities with those stocks, which is going to start to sound pretty sexy if the stock market's going sideways or down. So those are great safe havens right now. This is not investment advice. I'm a VA home loan specialist who's just trying to share with you what I'm seeing and what's going on. What's up, Leslie? How you doing? Well, isn't that sweet? See, this is what's cool, guys. If you say something, I can put it up. Hi, Leslie. She is so awesome. I love to start my morning with great info, too. Thank you so much for saying what's up. And if If more information comes out today that's important, I will do another video later today. I've got to get after it, but I appreciate your time. Share this video. And if there is anyone that you know who has questions about VA home loan benefit, wants to buy or refi with the VA home loan, have them call, text, or email me. I would love to help them. Thank you so much for your time, and have a great day.